So you might have heard about the silver bullet, but what actually is the silver bullet strategy? I'm gonna show you in this video. It's really simple. It truly happens every day, or at least 99% of days this happens. So what actually happens is this. You want to wait for 10 o'clock and trade between 10 to 11 o'clock. And what happens is this. We want to wait for the price to take one side of the liquidity. And this happens truly almost every day. Then wait for fair value gap to the opposite side, which should also always happen. And aim for 5 handles to the opposite liquidity that was taken. So this is like actually it. Now I'm gonna show some examples from last week, and you will see yourself that it truly happens every day. So look for 10 o'clock to 11. Now I'm gonna remove this. And so you can see we took out this liquidity and there was no fair value gap formed. So you can just wait for the fair value gap. The first one we got was here. So you could have entered short, 5 handle stop loss, or even just like the high stop loss, which would be 3 handles. Target 5 handles. And you can always leave one runner for the liquidity side to be taken out, which you see it got all the way down here. Now we can go to another day just to show you it's like true that it happens most days. So liquidity taken out at 10 o'clock, fair value gap formed right after that. Entry here, 5 handles, 5 handle stop loss or the high, which would be like also 5 handles almost. 5 handle target, hit, liquidity, hit. Let's go another one. So I'm gonna just mark out the 10 o'clock now. So liquidity taken out. Now looking for fair value gap. Here, small one, very small one. Is there more? Yep. And one here. Okay, so when you have more than one, always try to enter on the last one, because first one is usually the worst one, and if it runs down without you, it's fine because you didn't lose money. But what can happen is you enter here, you have 5 handle stop loss, and look, it hits the footrest one. So always try to enter on the last one, or the middle one at least. So let's say you entered on the middle one, 5 handle stop loss, 5 handle target, hit, liquidity, well, it went straight down, so you could have held for 10 handles. Now let's see another day, 10 o'clock, liquidity was here and here. So first one was taken out, but no fair value gap was left. Another liquidity here also taken out, and maybe this one is. So you can see that we took out 3 liquidity pools, and now we want to see it drop down. So look for fair value gap, entry, 5 handle stop loss, or the high. So, and yeah, I guess that's the whole last week. So we can look at today too. 10 a.m. to 11. Liquidity taken out here, and like this one was too. Also this one too. Also, it doesn't really matter how many of the liquidity pools were taken out, or at least in my experience doesn't matter. So fair value gap, and this is actually a case where you would lose, see, 5 handles, you would be stopped out right here. So, you know, not every day is a good day, but also we have to remember that we took out this liquidity and we also took this one right after. So you should enter on this fair value gap here and target the 5 handles, but it would be like close to 11, so I don't think you should take the trade. So I guess this explained a lot with some proof that it actually happens every day. You can make money every day. You can easily get 5 handles every single day. So thank you guys for watching. It's all from me. See you in the next one.